Hey traders, Raghee here, and today we're going to talk about the 3 indicators every day trader must use. Number 1 is sitting at the bottom of the chart. Think of it as the foundation, and this is the multi-structure. When we're day trading, how do we know that price action is likely to keep moving higher or lower or sideways? And the way that we do that is by understanding what the momentum of that time frame is, the 5-minute, the 1-minute, the 3-minute, and that symbol. So when I look at these 2 rows here, the top one is momentum. The bottom row is trend. The best type of follow through is going to come when both of them are indicating bearishness or both of them are indicating bullishness. That's the best environment. The next best environment is if we're neutral. And then we're going to decide which way could price go after reaching support or resistance, which brings us to the second tool. How do we find support and resistance? I do so with 2 tools. First is my hourly price movement range, and that is a historical indicator that studies up to 6 months of data to determine what is the typical number of points, whether it's Google, the S&P, bonds, Nvidia, how many points could they move given a certain period of time, in this case 1 hour. And this then projects the support and the resistance based on that symbol and that time of day. Using volatility is a great edge because it's going to identify support and resistance most traders don't see. And you can see right in here, price sunk down to the support, the green zone of the hourly price movement range, which brings us to the third indicator that every day trader must use. And this is a classic 60-plus-year-old indicator called the Darvis. Now here at Simpler, we've modified, really modernized the Darvis for the kind of price action that we're seeing now in 2025, as opposed to, say, 1955, when Nicholas Darvis created this process. And you'll notice I have 2 purple lines on this chart. The upper one would be resistance, the bottom line would be support. And the reason this is so powerful is once I have, for example, bought as price action has sunk down to support, in this case, volatility-based support, where am I going to take my profit? Where might there be an obstacle that prevents price from moving higher? And very often, an initial target can be the automated Darvis resistance. So as we buy here, price gets to this level and I can proactively pay myself. It doesn't mean price can't keep going higher, but it does mean there might be an obstacle. And this one was a great proactive place to pay myself. Price kept going. Then we got another Darvis here, right? And these are always looking for the pattern to form. And right there you can see it held and begun to send prices lower. So by automating these tools on your charts, you'll be able to understand which direction is the current price action indicating the follow through will be in, and automate support and resistance using volatility and using price. And when you put all those together, now you've automated all the things that could create error or hesitation or slowness in your day trading, which is something we don't want. And you can just basically read the tea leaves and look for these levels to be reached.